The China Report for Thursday, April 18, 2013. New restrictions spark China property scramble. Home prices continued to climb in China last month as buyers rushed to complete sales before new government efforts to cool the country's property market kicked in. Housing prices rose in 68 of 70 Chinese cities in March when compared to the previous month, according to the National Bureau of Statistics. Compared to the previous year, prices were higher in all but 2 of the same 70 cities. Prices in the capital, Beijing, registered one of the largest increases, rising 8.6% over the previous year. In the southern manufacturing hub of Shenzhen, prices jumped 8.9%. Real estate prices have been trending higher for much of the last decade in China, sparking a cycle of government reaction. China says investigating human-to-human spread of bird flu. China is investigating the possibility of human-to-human transmission of a new strain of bird flu that has killed 17 people and is examining family clusters of people infected with the virus, a top health official was quoted as saying. Authorities have slaughtered thousands of birds and closed some live poultry markets to slow the rate of human infection. But many aspects of this new variety of bird flu remain a mystery, particularly whether the H7N9 strain is being transmitted between people. China has warned that the number of infections, 82 so far, could rise. Most of the cases and 11 of the deaths have been in the commercial capital Shanghai. Should China worry about a GDP slowdown? For years, the conventional wisdom about China's GDP was this: if the country didn't meet its target of 8% annualized growth, political instability would result. The reasoning behind this wisdom is pretty simple. The Chinese Communist Party, having long ago forfeited its ideological legitimacy, depends solely on providing economic growth in order to stay in power. So long as enough people prosper, they'll put up with a fair amount of repression and corruption. But as soon as economic growth slows, China could be in for a rude awakening. Has the time come? China's GDP grew by only 7.8% in 2012, its worst showing in over a decade, and the numbers for the first quarter of 2013 are even worse, just 7.7%, below the 8% forecasted by a Wall Street Journal survey of economists. To make matters worse, there's some question that the actual number is even lower. Some economists are questioning the accuracy of China's inflation statistics, which would mean that real growth is lower still. Should Beijing be worried about political unrest, then? Probably not, at least in the short term. Commerce grows between Mexico, China as the U.S. market. As the top suppliers of manufactured goods to the U.S. market, China and Mexico have typically been in direct competition over the past decade. More often than not, the business went to China. But with labor costs rising there and Mexico pushing for new access to Chinese consumers, the rivalry is shifting, economists and trade analysts say. No longer pure competitors but not quite partners, the two countries are moving toward an expanded trade relationship that could ultimately benefit the United States by boosting U.S. exports and keeping cheap imports flowing to U.S. consumers. Mexican President Enrique Peña Nieto's recent trip to China, coming just 4 months into his term, has been viewed here as a smart overture aimed at mending ties between two nations that have often been at odds over trade issues. Mexico resisted China's entry into the World Trade Organization in 2001, and its share of the U.S. import market started slumping soon after. Now the trend is in reverse. Mexico accounts for a growing portion of U.S. imports, and China's slice of the $2.7 trillion market has narrowed. Those tendencies are likely to continue, economists say, as several new studies show that Mexican manufacturing costs are now lower than China's when factors such as shipping and energy prices are taken into account. That's the China Report for today. Zaijian.